Okay, we're going to look at the Dixie here, and as I say, it's a very important asset because most things are denominated in dollars, and so as this gets stronger, it puts pressure on risk assets especially. So this is the dollar index. If we look at the daily chart, we are on day 12 of this daily cycle, which is the first daily cycle of this new intermediate cycle. Well, actually, wait a second. Let me just double check that. So that low was May 30th. No, actually, this is the second. Yeah, so that's important. So we had a short first cycle, 20 days, right? So we had the high on day 12, the low on day 20. This was a slightly lower low than this. And now we're rallying out of that. It's day 12. This definitely looks like a toppy candle, but we've had those kinds of candles before without topping. And more importantly, we are on week 6 of the weekly cycle. So that gives you a sense of where we are. We had this little higher low here, and then now we've continued to rally. And you can see last weekly cycle topped out on week 17. One before that, week 26. So this thing could run for a bit longer, unless this is going to be a left translated weekly cycle, obviously. The most important thing to pay attention to is where we are in the 3-year cycle. So 3-year cycle, easy math, 36 months. This is month 18. We're exactly halfway through. I mentioned this in my other video. So you have to think about where are we going, like where could we get to before the end of this 3-year cycle? Could we test this peak here at 120? Certainly possible. But, you know, if you're just being more sort of like, let's say like minimum levels, you can see like 112 being something like that. Looks like an important area, right? You had a lot of wicks below. It was resistance here. So you could see that sort of, well, actually, that's more like a 113. At this point, if we think about this weekly cycle, we just talked about we're in week 6. It would seem like this one is going to run to at least, 110. Then we'll get our pullback. We'll see if it is actually a higher low, and then we'll see if we continue to push. I would suspect that, last 3-year cycle topped out on month 25. It was a pretty bearish one. The one before that was really bearish, topped out on month 8, but it was also a lot shorter. So what I would say is we could easily keep running until month 25, for instance, which would mean we keep running for another 7 months. You could see a world where this thing doesn't top out till month 25. That continues to keep pressure on risk assets. So you have that sort of correlation with the market continuing to go down as it's falling into its 3-year cycle low, right? Because that's important to understand. The market, broader equities, have peaked. They have most likely made a 3-year cycle low already. Qs month 2020, SPX month 22. So as the market drops into a 3-year cycle low, the dollar, it would make sense, is going to rally into a 3-year cycle high. And as we think about the market, I want to pull up this just interesting kind of graphic that I think is helpful to sort of think through. And so you think about the Fed meetings, the way they've dominated, and CPI prints. But here we'll just look at the Fed meetings first. The next Fed meeting is the 27th. And so it would appear that that's going to be a catalyst. Now, it's either going to be a catalyst for a low or a high, right? And so that kind of depends on, do we continue rallying out of this low where we seem to be forming here? I suspect that might be the case. What we have happening here definitely looks like it's trying to form a bottom. But, okay, so here it goes. That took a really long time to load. So this is the daily chart. And so you can see each of these lines is a Fed meeting when they came out with the minutes, so that second day. So you can imagine a world where we rally up into the Fed meeting, and that becomes our top, and then we start making lower lows and lower highs, and that's how we ratchet our way down to 3,200. Or if we can't sustain this rally, we go lower into the Fed meeting more or less. Then we pop, and then maybe continue to make lower lows and lower highs. So either direction probably gets us, into the 3,200 area, call it in the sort of fall. But it's a question of do we rally into the meeting or do we sell off into the meeting? Either way, you can imagine it's going to be a turning point. It's really just a question of what the condition of the market is going into it. So it will be really interesting to watch.